Good afternoon, everyone. Thank you for joining the Exchange 2.0 discussion. I am particularly very excited to talk about sort of like how exchanges have evolved over the years. I've been working at exchanges for the last 5 years, just recently joined Ondo. So I have seen and witnessed sort of like the evolution in terms of how this exchange platforms has adapted into truly a super app. You're able to do literally everything within an exchange platform right now. You can invest, there's wealth management, there are bots already in it, and now we're introducing tokenized stocks and ETFs. So now we are seeing sort of like this blurring between a TradFi platforms and a DeFi platform. So with me, we have leaders in the industry, so I'll ask them to introduce themselves.
Oh, great. Well, thanks for having me today. I appreciate it. My name is Peter. I'm the CEO and founder of blockchain.com. We've been helping people and then later institutions be part of the crypto financial system since 2012. So we've been at it for quite a while now, as I'm reminded sometimes. And today we have about 40 million retail customers around the world, about 2,000 institutions that we do various sort of business for, and we transact about 1 to 1.5 trillion in volume a year. We're also a major supplier of liquidity across the ecosystem, and we have sort of helped incubate, invest in, or launch a lot of the sort of more successful projects and companies across the space today. And so, yeah, we have a pretty broad sort of view across the whole ecosystem, and one of the things that we're most excited about is bringing sort of more assets from the traditional finance world into the crypto world. Particularly the sort of really interesting and high-quality assets that our customers are eager to have access to.
Hi, everyone. I'm Gracy Chen. I'm CEO of Bitget. Bitget is a top crypto exchange established seven years ago. According to CoinGecko, CoinMarketCap, we are typically top 5 in terms of trading volume among other offshore exchanges. So one key strategic change that we are having right now or facing in this industry is exactly what the title points out, from crypto to stocks. As Ming pointed, we are all partners with them, and Bitget partner with Ondo mainly on being one of the distributors for their tokenized US stocks and ETFs. And I think according to your data published in December, we contribute about 90% of that volume. So that's definitely a lot of tractions that we're seeing from our retail users who are interested in trading tokenized US stocks and ETFs. We have 120 million users coming from more than 100 countries. So definitely also want to explore other opportunities with you guys, audience, anyone who want to expand or collaborate with an exchange like us.
Thanks for having us. Michael Shaulov, I'm the CEO and co-founder of Fireblocks. We provide infrastructure for institutions and enterprises, mostly financial institutions, over 2,600 financial institutions that are using our platform. And that includes everything from wallet, settlement technology, tokenization, and access to DeFi, orchestration, and many other things. So, we basically, last year, there was about $6 trillion worth of transaction volume that went through our platform. And about 40% of our client base are what you would define as like exchanges, super apps, neobanks, basically the category that is financial institutions that are facing retail clients. I think, when you aggregate probably over 1 billion of retail clients across all those platforms. And definitely kind of what we've seen front and center in the last 12 months or so is the convergence, or basically the adoption of traditional assets into those platforms, and which I think makes a lot of sense for anyone who is able to offer digital-first experience. And also probably something we're going to talk is a bit of how the incumbents, right, the old-school TradFi, are currently looking at it, and what are they going to do about it.
Thank you very much. Peter, diving straight in, right, you've been sort of like in this industry for quite some time, right, since 2011. So you have seen across the various cycles, you have seen sort of like the evolution in terms of how exchanges has adapted over the years. What is your perspective with regards to how are the platforms evolving and now integrating tokenized stocks and ETFs into offering? how are you seeing the competitive landscape with, say, TradFi super apps?
Yeah, it's an interesting question. I think, crypto exchanges are for the most part in the business of growing and harvesting sort of retail trading flow. So almost like a payment for order flow model. With that said, like most of the real liquidity in sort of the top 5 digital assets is predominantly, in 1 or 2 derivative markets. And increasingly for Bitcoin, it's in the CME. So what we see is, sort of with tokenized equities, the liquidity obviously for those assets is in the traditional financial markets. And to some extent, you see these assets issued on chain and then they're going to be distributed to retail through the sort of exchanges, brokerages like ourselves, et cetera. But the real liquidity for those assets will remain sort of where it's always been. And so one of the things that we think will be an interesting transition to watch is sort of the transition of liquidity of crypto assets moving away from a lot of the sort of cloud-based, more retail-oriented exchange platforms back into the sort of on-prem traditional finance trading venues. Which whenever I say that, the crypto people kind of in the room get a little upset. But we're already seeing that transition happen live. In the case of Bitcoin and Ethereum, price discovery is almost exclusively on the CME at this point. And I think we'll continue to see that across any assets that are very successful. I think for assets like, that are smaller, like a new project or a new ICO, of course the liquidity for those will predominantly be in crypto native exchanges. And I think that will predominantly happen on DEXs actually. But I think for assets that really get to scale, you'll basically see them almost emulate what we see in tokenized stocks. And so I tell people that like, as a platform, offering tokenized stocks, getting good at setting up that infrastructure, hedging across TradFi and crypto native venues is super important because I think that that's probably how price action develops across the entire market.
Thanks. And Gracy, I know that Bitget's focus has been kind of like launching what you call the universal exchange, right? Can you talk a little bit about that sort of like initiative at Bitget? And then how have you sort of like prioritized TradFi integrations within the platform?
Sure. In the crypto world, there are 2 terms, CEX and DEX, centralized exchanges, decentralized exchanges, a little bit like bipolar, and people just think it's either CEX or DEX. In our opinion, it doesn't really explain what we do anymore. Since 2025, we still hold very high security. All of our users need to do KYC, that kind of standard. That's very similar like a UEX. But at the same time, we offer lots of on-chain kind of tokens, including, of course, Ondo tokenized stocks and ETFs. But at the same time, actually millions of on-chain DEX kind of trading assets, as far as they are launched on top 5 public chains that we integrated, including Ethereum, BSC, and Solana, etc., they are tradable. Like our users can just put their contract address of this token and start to trade it using the USDT and USDC, etc., the infrastructure on exchanges. So we feel either DEX or CEX can explain what we do now. And we came up with this term, UEX, Universal Exchange. It's not just a marketing term. That's something I want to highlight, although it sounds very much just like you guys created a new term. It is a trend. What I mean by that is if you look at the exchanges, we are all sort of offering more TradFi assets. It's not just Bitget, but Bitget is leading this conversation. Coinbase call it everything exchange. They're also exploring offering stocks and crypto as well as some other RWA products. Binance Wallet also listed on those stocks. But that is a trend that lots of offshore exchanges are heading to. We just tend to call it Universal Exchange to explain what we do exactly. So Universal Exchange means universally asset coverage, at the same time using, for example, AI as a tool to help our users gather information, place some trades, and also still hold very high standard for security and protection. We have actually the second largest protection fund in our industry, which is 700 million AUM sort of fund, so that as an insurance kind of establishment there, just in case any of our users were hacked or lost money due to unstable system. That has been very, very important, like holding the trust and the credibility, as well as being able to offer a good amount of products to our users have been the key focus for us. But we just feel universal exchange is a good term to summarize what we do now. And I think it is a trend for the whole industry.
And Michael, like Fireblocks serves, what, 2,600 institutions you mentioned? So that spreads amongst neobanks, wallets, exchanges, and so forth, right? How have you seen that demand in terms of tokenized stocks and ETFs amongst those platforms?
Yeah, so I actually like the UX because we call it the everything exchange, but
it's the same thing.
It's a better term, by the way. So we'll start using it because we have a blog about it.
Love it, thank you.
Yeah, but look, I mean, it is a trend, right? The trend right now is that I think anyone who has any form of financial app that is targeting retail users is trying to expand to a horizontal offering that includes everything, right? I think that probably like, Coinbase definitely like kind of were the one to maybe set the marketing tone, but I think that there are actually quite a lot of different providers that are, to a certain degree, front-running them. From our standpoint, first of all, our goal was to actually set up the infrastructure for them to be able to do it. We recently acquired a company called Dynamic that is doing on-chain wallets for exchanges and retail apps and fintechs. That is actually a critical component to do this successfully. So you can have basically a segregated account that is kind of non-custodial account that also is the regulatory experience with a custodial account, and of course the access across all the different blockchains. I think maybe like the biggest brand that maybe front running a lot of it right now we've seen is Robinhood. So they clearly came to all this from the very traditional space of competing with the interactive brokers and E-Trade and so on. And I think when they were solely in the United States, it was very clear that stock trading is done through their brokerage in the very traditional way, but they also had a very robust infrastructure to power crypto. When they decided to expand to Europe through the acquisition of Bitstamp and also probably soon into Canada, they figure out that actually doing it through a tokenized formulation gives them the ability to go into this basic acquire license, but then immediately deploy the technology and immediately deploy the capabilities. So if you're actually now downloading a Robinhood app in Europe, the experience from user experience looks the same, trading Apple stock. But you actually see this kind of chain icon on the left corner, top left corner of their screen. And if you click on it, you can actually see the on-chain transaction for the settlement. So I think that this is the direction of travel pretty much for everyone. I think that there will be probably a bit of a mix on based on the demographic of the users that you are servicing, what type of tokenized assets outside of stablecoins, which I think like stablecoins is like ubiquitous, right? But like what other assets people will start offering successfully on their platforms.
And Michael, you touch upon sort of like infrastructure, right? So like stablecoins has obviously scaled because the infrastructure has been there, right? What do you look at from an infrastructure lens standpoint for us to be able to really scale in terms of adoption across tokenized stocks and ETFs?
Yeah, I mean, my observation, and again, I think that Gracy and Peter, you guys probably will have a more nuanced view on that. From a technical standpoint, my sense is the infrastructure is actually there, or at least like, in our layer of the stack, the infrastructure is there. Because the same technology pretty much that we provide people to deal with stablecoins or with any other, so to speak, RWA, is actually suitable for dealing with tokenized stock, right? It's actually asset agnostic. It seems to be that the main difference is actually the regulatory treatment, right, that is happening across different jurisdictions and liquidity, right? But I'll leave it to
Yeah, I would say that the big difference is, in the stablecoin world, there is enormous liquidity. Like we can move billions, from banks to stablecoins and back and forth across all of them a day and have. I think it would be very challenging to move $1 billion of tokenized equities in one day right now. Probably impossible, actually. And so I think a big, I don't know if it's technical so much, because I would agree with you that it's sort of all the same technical infrastructure. But from a sort of market operations and market liquidity perspective, there's definitely a pretty long build out to do before, the liquidity for tokenized equities matches, stablecoin liquidity or even sort of liquidity in the stock market itself. So I think, there will be a relatively, medium-term build out of that. But I don't think it's a very technically difficult challenge, and I know it's something that you guys at Ondo are working on quite actively. But I do think it'll be several years before, a year or two at least, before the market operations side can match like a very heavy demand for tokenized equities.
And as we are looking at sort of like scaling adoption, right? I think in the earlier panels, someone touched upon utility, right? And Gracy, I think Bitget has sort of like innovated with regards to truly the integration of the traffic products. How are you sort of like thinking around bringing utility of those tokenized stocks and ETFs onto the platform for users?
Yeah, so Bitget is pretty big in perpetual and futures trading, and there were users who, or partners who asked us if we can enable using tokenized US stocks, for example, as a collateral to do prop trading. I find that a bit challenging because the users have a difficulty to understand why they should do it. We understand that they don't want to sell it, but it seems that maybe a loan product around that may be more visible, and that is something we are discussing with our partners and internally to see if our users really have a need like that. Another landscape around this is also around regulation. In my opinion, regulators are like your parents, annoying but necessary. We do need to collaborate with them, and on each individual jurisdiction, the offering can be very different. But I'm sure compliance and regulation is another reason that we're a little bit hesitate about offering even just tokenized stocks to all our users. We can't cover other regions.
Yeah, staying on that theme of regulations, actually, how are you looking at regulations at a global scale, right? Because, how are they looking at where are the geographies that are most constructive when it comes to offering this type of products, and where do you see more fragmentation?
So MiCA is one region that exchanges are paying close attention to. We are applying for our MiCA license, and it should be done very soon this year. US is another big market that exchanges have problem with. Other than Coinbase, Kraken, maybe Crypto.com, these are more US-based exchanges who grow up from this market that feel very comfortable and have the infrastructure of running it. All the offshore exchanges are very hesitant about entering the US market because the compliance cost is really high. You need to get federal license, individual state license, and all of sort of remittance and then custodia, different licenses, just too many licenses there. Our parents ask for a lot of things. And then in Asia, I would say Dubai and maybe Hong Kong are also leading some of the regulation innovations, especially Dubai under the VARA framework. Hong Kong is a little bit back and forth. I think they were very optimistic and crypto-friendly around stablecoin and RWAs last year, but maybe central government of China have kind of put a halt on that, and they went back a little bit. Singapore was very supportive before FTX collapsed, but I think Temasek, the Singapore government fund, lost a lot of money in FTX.com and FTX.US, and after that we saw Singapore backing off a little bit. So it's a very dynamically changing landscape in terms of global regulations, but I would say right now Europe, US, certain cities or regions in Asia are more crypto-friendly and have fairly reasonable frameworks for regulating as exchange business as well as RWA and stablecoin kind of innovations.
And bringing it home a little bit, Peter, I know that you're very sort of like involved in the Clarity Act, right? And then the SEC has published a statement around tokenized securities sort of like recently. Do you mind sharing a little bit in terms of your perspective on what has the conversations been around that?
Yeah, I've been doing policy meetings in DC since 2013. Which has been fascinating. And I would say the one thing I'd say is like from where it started in 2013 to today, it's largely just improved. So, give it long enough and we'll get to a good place. But, and there's funny stories I can tell about that, not on stage. But, the biggest irony of the global regulatory landscape for crypto today is that Europe, the EU, is the first major geography to come up with a dedicated and implement a dedicated harmonized framework across a major market. Which if you'd asked me 10 years ago if Brussels would figure out how to do it first, I would have bet very heavily against it if there was a working prediction market at the time. But that's what's happened. So in Europe, and there's things about MiCA that we don't love, there's things that we love, but at the end of the day, there's a harmonized framework for digital assets across all of the EU, which no other major market or region has. I think that you're going to get that this year in the UK as well. So the FCA is moving from a registration to a full license, from an authorization regime to a license regime. So that'll be harmonized. I think you're right that Singapore was a leader a couple of years ago, and we hold a Singapore license. So we've been through a lot of interesting conversations with the regulator over the last couple of years with MAS. I think they've been a lot less enthusiastic post the FTX crisis. And then I think this year we will get the Clarity Act in the United States, which will clear up a lot of the things that you've talked about with state and federal preemption and what have you. It is difficult. We maintain all of those licenses in America, and they are duplicative, and it is hard sometimes even to figure out which set of rules you should listen to because they are sometimes in conflict. And one of the things that I tell folks in DC, where I've been spending a lot of time lately, is that it's really not about the fact that the industry doesn't want to be regulated. It's that we want to be regulated in a consistent, harmonized framework that allows us to build businesses in a predictable fashion.
And also that framework doesn't change every 4 years.
Well, that's going to happen. That's just America. It won't change every 4 years because it's very hard to pass bills. But the interpretation of those laws will change. But that's a 20% variance, I think, that you can think of. And I think it'll largely be in a much better space in another 12 to 16 months.
Well, one thing, though, to say about it is that I think that through this implementation, especially with regard to the SEC, I hope that we will see implementation that actually is kind of pro-innovation and takes into account what the technology is actually able to do for consumer protection and liquidity and removing risk from the system, and is not really geared to preserving the kind of old order, old business models, right? Because that's actually not given. And to a certain extent, actually, with tokenization in Europe, I don't think it was like, fully resolved, so to speak, under MiCA and MiFID.
All right. So fast forward, sort of like, I think the TradFi panel sort of like gave their future predictions in terms of what does a sort of like future of investment would look like on the crypto exchanges and sort of like wallet side. Like, how are you guys seeing sort of like, say, fast forward to 2030, like how would this sort of like space look like?
2030, 4 years later, I think RWA will grow a lot. I have a very controversial saying that altcoin season may never come. So for the crypto business, it's probably a little bit tricky, and that's why we're going universal exchange, right? Like just diversify the asset coverage. But I'm sure RWA is growing a lot. Like right now, tokenized US stocks is only less than 0.1% of the TradFi US stocks, so lots of growth potential over there. But not just tokenized stocks, but tokenized almost everything, tokenized gold, silver, commodity, as well as money market fund, etc. They all have lots of growth potential.
Peter?
Yeah, I think that people will use primarily one app or two apps to trade sort of anything. whether it's an event-driven trade, which we call prediction markets, but are really just event-driven trades, or equities or commodities or whatever it is. I think people will trade almost everything through one integrated interface where the help is sort of a whole lot of concern or even awareness of the infrastructure that they're trading it on top of. And just because that's a very banal prediction, the other thing I'd say is I fully believe that there will be another altcoin market wave because markets are very, the minute you think that they're done, they come back and hit you again. So now I'm just on the, we're always, there's nothing new under the sun program. But 2030 is a long ways out, and I'll have hit the mandatory crypto retirement age of 40 by then, so I won't be responsible for any of these predictions.
I agree. Anything to add?
Yeah, I mean, I think that I spend a lot of time with not only with the people on the crypto side and the crypto native side, but also with the execs of some of the most traditional banks. It's pretty clear to me that they're going to be dragged into this by kind of market forces, because at the end of the day, the consumers, the retail, the users, right? They won't like stick to experiences that are outdated and clunky. They will all move into experiences that are the most advanced experiences that they can sign up for, and therefore I think that this will impact those institutions as well. I think there will need to be a lot of alignment, a lot of investment, a lot of education over there, but I think it's also inevitable that the biggest institutions in New York City will have to offer that as part of their entire kind of offering.
Well, thank you very much. That's all the time that we have, and that's a wrap. Thank you very much, everyone.
Thank you.
Thank you.